Let's start with the first trade. Before New York opens, I already have my reference level from the Asia session, the value area high. New York opens and pushes above the Asia high. Most people are thinking continuation, but I'm watching whether that level holds. And it doesn't. Price comes straight back to the boundary without building an acceptance about it. That's my entry. Now let's look at the lower time frame. Same high tested twice. Range getting smaller each time. Momentum fading before the breakdown even starts. Then breakdown comes with the highest sell side volume of the session. That's the confirmation. I exit when the downside candles start losing range. Same signal that got me in is now telling me the move is fading. Second trade is the same story, the next session. And honestly, that's the whole point. When you see the same setup repeat, you're not seeing a coincidence. You're seeing a consistent market behavior. Price deviates from a value, fails to hold, reverts. Now let's look at the bigger picture, because the full chart is telling a very clear story. These gray zones you see across the chart are high volume nodes, places where the market did significant business at some point in the past. And what you'll notice is that every single one of them slowed price down or produced a reaction on the way down. That's not a coincidence either. These levels exist in the memory of the market. Participants who traded there are still referencing them. When price returns, they respond, and you see it in the price action. Now, that orange level is the one that really matters. Watch what happens when it breaks down biggest volume bar on this entire chart. That's not a slow drift lower, that's a conviction, real selling with a real participation behind it. Once a level like that gives away with that kind of volume, everything below it is exposed. And price follow through to every single gray zone below it without missing one. Look at those candles through the orange zone. Most of them have no lower wick. Price opens, drops, closes right at the low. Nothing tested below. The market moved through those levels without ever going back to check what was underneath. And what does price do with untested areas? It comes back. Not every single time, but mostly. You can see it happening right there on the chart. Bitcoin is well off its late 2025 highs, and the macro picture explains why the selling has had this much conviction. The correlation with the S&P 500 sitting at 0.55 right now. That means Bitcoin is largely trading as a risk asset. When equities are under pressure, Bitcoin feels it. Real yields are elevated. Institutional flows through ETFs have been inconsistent, and the broader environment is risk off. In that kind of backdrop, the buyers with the real size aren't stepping in aggressively. And when the big buyers aren't there, you get exactly what this chart shows, a market that keeps finding sellers at every key level on the way down with nothing to stop it.